Sanjay Shah, founder and managing director with Prudent Corporate Advisory Services, joins us now. Sanjay bhai, good morning. Thank you for joining us.
Thanks, Vivek.
I love the smile on your face, but for equity market investors, the smile from last 2 years is missing. What should investors
Yeah.
who invested in Indian stock markets do? Because last 2 years, fixed deposits have given them more returns.
No, to certain extent, I'll agree with you because when you look at the short-term horizon, but I can tell you, retail investors are absolutely happy with the way entire industry has become mature on managing the retail investors' money on the SIP side. If you look at the number of SIP investors and the money which is coming from them, I think the scenario is altogether different because they are very, very comfortable with the mutual funds and that number is growing rapidly. I think our experience of participation from the retail is very, very comfortable. I think the investors are becoming a little bit mature also. So if you look at month of October, November, when market was a bit high and tepid, I think we've seen some amount of redemptions. I think again, January, February was reasonably good on the net flow side. I think March, if I look at current situation, I think still it's a reasonably okay. So I don't see a huge panic or the pressure in the minds of retail investors, frankly.
But ultimately it's about returns, right? And the past returns have not been great. The projected returns, looking at what the valuations are also likely to be low. So I'm just trying to understand from you that this entire SIP cult or culture, which has been a silver lining. Actually, it has been more than a silver lining for our markets. Do you think that could get challenged? Do you think there could be anxiety, there could be disappointment? Because alternates are giving you better options, fixed deposits are giving you better options, FMPs are giving you better options.
So if you look at, I think the returns above 5 years rather than 3 years. So even 3 years also looking good because when you look at 3 years, the third year before this falls in March 20. So March 20 to 23 is a significantly better return on the SIP side. But overall 3 year, 5 year, 7 year returns are upward of 11, 12%. And with a good amount of what you call the transparency, flexibility, ease of investing, all put together, I think SIP has been becoming a very, very credible way of investing. And I don't see there is a significant alternative available to the retail investor. So you look at people who used to invest into post office, who used to invest into other ways of investing regularly. Now that money is getting channelized to the SIP. Second, maximum money is coming through your young investors who are just starting their career. And I know a lot of people who, when they started investing, they started with SIPs. They don't know what the fixed deposits are. So it's a very structural change in the behavior of the people, and they are definitely looking at a longer term investment horizon. So, sir, if let's say this bear phase continues for 10, 12 months, then only the testing time will come of the retail investor. Otherwise, what has happened in last couple of years is that you have seen the volatility persisting for about 2, 3 months, and then again market bounce back, and that gives a lot of comfort that if you remain invested, you are going to make a lot of money in the longer run. And the expectation is not 25, 30%. People are happy with 10, 12, 13%, and that is something which I don't think that industry will not generate. It's definitely people will be able to make money if they remain invested.
Okay, fair enough. Sanjay, hi there, morning. I just wanted to understand what the outlook is for the company in specific because your margin guidance has increased from 17% in FY19 to about 25.6% for the 9 months FY23. What is the outlook on your margins? Do you think that over the next 2 to 3 years we can see it touching the 30% mark?
So the margin would be mainly if you look at from an operations side. I think if you look at the company has invested significantly as far as creating digital presence is concerned or creating our physical footprint is concerned. So now whatever is the incremental penny comes by of AUM, the incremental money straight away goes to the bottom line. Hence, I think operating margin will continue to improve from here onwards, assuming that the my AUM growth is reasonably good. If I'll give you the guidance on the AUM side, I think we being a very strong retail participant on the mutual fund sides, if you look at today, currently my SIP book is almost about 525 crore a month. So we started year with about 425 crore. We are now at 525 crore. So if you annualize this 525 by 12, it comes to almost about 6,500 crore, and my current AUM is 57,000 crore. So I have a very visible inflow coming in form of SIP, which is about 10 to 11%. And on a longer run or medium run, I always say that fund management will also generate about 10-12% CAGR for the investor. So if combine these two factors, I think I'm pretty comfortable that in next 3-5 years we should be able to grow easily at 25% CAGR on the AUM side. Keeping in mind the operating leverage, I think I should be able to maintain my growth at 25%.
Sure. Sanjay, your revenue, or rather share of revenue from insurance products, from just a minuscule figure in FY19, it's now to 8% in FY22. Could you share with us the plans of de-risking your portfolio concentration, and what kind of new offerings can one expect now in this fiscal or the next?
So I think that's a very important point you are talking about. So if you look at before 19, we used to be a pure mutual fund distributors, and it was a conscious call of adding the other retail product, which is probably helping our distributors to increase their wallet share from the customers. So we started selling. We acquired the broking license. Our 100% subsidiary company in insurance broking is a company called Genex Insurance Broking, and that has been. So we feel there is a huge scope for us to increase our share in the insurance side, and which was zero is now at about 8.5%. Another thing, we started selling all the non-mutual fund financial products like PMS, AIF, unlisted securities. We also onboarded small case. We also sell a couple of P2P products. So all put together contribute about 4-5% of my revenue. And these two, insurance and non-mutual fund products, I believe because of the lower base as well as potential, I think we should be able to grow significantly in our system. So that is first part of our de-risking the business model. However, my belief is that the mutual fund per se is also going to give me a huge growth driver, because the biggest advantage of mutual fund is the trail, which is you can say the very, very steady and sustainable revenue stream which is visible to us. So I think we added a couple of products. We just wanted to consolidate on this growth. We don't want to add further, at least for next 1 year. And we want to become very, very strong on insurance and non-mutual fund product side.
Enough. Now, given that 48% exposure and 29% of MF distributors are in B30 cities for the company, is this geography underpenetrated? Is there more expansion prospects for this segment?
Yeah. So if you look at my maximum expansion, which has happened in last 5 years, has happened in B30 market. Now, if you look at my share in B30 market, industry is 29%. I'm below 20%. So I have a huge scope for increasing my share in the B30 market. We are reasonably lower in that segment, mainly because we expanded only in last 5 years. So I think potential growth for Prudent in B30 market is going to be very, very large. Any expansion which will happen now for us would be only in B30 market, because we are significantly covered in top 30 cities. So yeah, I think the overall industry is also poised for significant growth from B30. If you look at almost 70% of number of SIPs which is coming today in the industry, on the value, number of SIP is coming from beyond 30 cities, and same is going to be the case for us also going forward.
All right, we'll let you go on that note. Thanks so much for taking time out and joining in, giving us a perspective on some of the trends for the industry, SIPs, as well as how business is shaping up.